Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Investments Limited, and as I speak to all of you all this Monday morning, a slight bit of consolidation continuing on the market with marginal losses on both Sensex and Nifty. Uh, this week is going to be truncated trends on 5th of November, that is Wednesday. We are going to have a holiday on account of Guru Nanak Jayanti, so it's a truncated week. And our sense, as far as the market is concerned, is going to be a market which will consolidate for this week, and possibly next week. You might see some kind of positive moves on the upside. The range for the Nifty that we have set aside this week is 25,500 to 25,600 on the lower side, 25,800 to 25,900 on the R side, with stock specific moves on fallback of earnings second quarter, which has been much better than what the street has expected. So we expect this positivity to continue going forward from here on. And the sense is that the news flows from the global arena with respect to US and China signing a truce for 1 year, and US lowering its tariff and China agreeing for purchase of soybean and for export of rare earth minerals and magnets. I think there should be a little bit of relief as far as the two largest economies are concerned. And I think the markets would react to further positive news flows on the global arena. But on the domestic front, I think with the earnings season being better than what the street has expected, we did recover a sizable amount of ground, but then failed to maintain our higher level of 26,000, 26,100. We went over there, but we corrected to the lower levels where we are right now. So we expect uh, brief positivity in the markets for this week, but a large part would be consolidation. And I think it is good, friends, after a run up that we've seen over the last 2 weeks. It's only prudent for the markets to consolidate and then move upwards. So stock specific moves will be there, especially led by banking and finance. That is the entire BFSI segment. We expect this BFSI segment to do well. Earnings has been much better, and I think re-rating is going to be the order of the day as far as public sector banks are concerned. On the volatility front, India VIX upward move of 12.82 and an uptick of about 5.45% today on the India VIX. Uh, Rupee is marginally weak at 0.01 paise, and the level is 88.78 rupees to $1. And on the crude oil front, marginal uptick, but nothing to worry. $64.97 to a barrel is Brent, and $61.16 to a barrel is NYMEX. Expect lower levels or these ranges on the crude oil front to continue without any major uptick. And on the rupee dollar equation, I think again we should see strength towards 88.50, 88.65 on the rupee against the dollar for this week. So expect some strength coming back in the rupee. And on the flows is concerned, well, it's a flip flop as far as the FIs are concerned, but domestic institutions have been putting in money whenever it's opportunity that is found. And of course, this week you will have a lot of IPOs also getting listed, and next week you will have a lot of IPOs opening up for subscription because the primary market is going to be buzzing on fallback of launches of new paper coming into the market, and of course valuation, etc., and credibility in terms of management and businesses. So overall, remain constructive for the market, but I think it's going to be very stock specific. Um, this week, markets may tend to find a little bit of headroom on the higher side, but since it is a truncated week, I think we should spend it consolidating rather than expecting any large moves. Two investment ideas, friends, as always, and like I was mentioning in my opening remarks, banking and finance, especially public sector banks, and the public sector bank index has been doing extremely well on form for earnings. We have two investment ideas. One is from a large cap, one is a small mid cap PSU bank, and both of them, in fact, have made their new all-time high, and both of them have got re-rated upwards post the earnings. The first one is State Bank of India, India's largest bank, with strong network and visible amount of strength as far as the earning is concerned. So we have a buy coverage recommendation, and mind you, before I go any further, all recommendations that I'm going to share on this in this video are a part of our research team recommendation. Our company Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might hold their investment interest. So the first one is, like I mentioned, India's largest bank, public sector bank, State Bank of India. The second one from a mid-cap public sector bank is Indian Bank. Indian bank friends have been reporting very strong numbers, and that is one of the reasons why it has actually outperformed some of the larger public sector or private sector banks. And we expect this run rate to continue as far as public sector bank and Indian bank is concerned, along with State Bank of India. And my sense is that loan book growth, lower interest rates, improvement in asset quality, and provisioning coming back to the balance sheet should augur extremely well from a long-term point of view. So start at current levels from a long-term point of view, and you can add on dips. Mind you, friends, these are not STBT, BTST, 6 months, 3 months, or 9 months kind of investment idea. These are purely fundamental long term. You need to have at least 1.5+ kind of time horizon if you eventually decide to invest after doing your due diligence and homework, of course. Thank you very much for your patience hearing. I'll see you again next week. Till then, take care. Bye bye.